Today, I want to talk about how one of the largest AMC short sellers and liquidity fairies could be about to collapse. I also want to talk about how AMC recently had over a third of its entire day's traded volume fail to deliver. So stay tuned and let's make some money. I wanted to start the video with another two brilliant testimonials from the Millionaire Mindset Trading Group. Shazad on his first day in the group made 24% on his entire account, up $224. Tower Kings has been taking things slow and steady, compounding those small gains, and has closed off this week up 20% versus another 7% last week as well. And now I'll dive straight in with the key information. So, the Moon Traveller tweeted saying this has got to hurt, as Virtu Financial just reported mixed fourth quarter and full year 2023 results. So to start with the results, it says Virtu Financial's net income dropped significantly to just $6.7 million from $40 million in the same period last year. Now, what really strikes me first off the bat with this small number is just how small it really is and how close to loss-making Virtu actually are. Actually, in comparison, AMC generates more net income and has done so in the last few quarters. So right now, AMC is more profitable than a hedge fund or infinite liquidity fairy. A market maker that can literally set stock prices at whatever they want those prices to be set at is struggling to generate profits more than just a small movie theatre. Actually, the CEO of Virtu says that AMC should be bankrupt, but if AMC is more profitable than Virtu, what does that make them? Worse than bankrupt. Now, what's even more interesting is the fact their net income dropped so significantly even though their revenues had actually increased, showing an increase in costs as well, or exceptional circumstance costs. aka some giant losses they had to recognise this quarter and may have to also recognise going forward too. On top of that, their adjusted EBITDA or profit before tax, depreciation, amortization and interest has also decreased as well, decreased about 20% from the same period last year, which had also decreased 38% quarter over quarter and 46.9% for the full year compared to last year. So Virtu Financial, a market maker that can set stock prices at whatever they want them to, is struggling big time and is about to become loss-making. As a result, their stock price fell 10% in one day yesterday on the 25th of January 2024. And looking backwards towards their highs, their stock price is down 56%. Every time Virtu stock even tries to recover just a bit, the stock price is smacked back down towards the lows. If Virtu keeps this up, their stock price will be down 99%, and Virtu Financial will practically be a penny stock if they don't go bankrupt first. And to me, if a stock or company is down 56% from their highs, either A, that company is suffering a massive attack from synthetic short sellers, but if that company is the synthetic short seller, it's likely just the company is struggling a lot and could be about to collapse. And at this point, if Virtu doesn't improve itself and start generating some profits and start recovering their stock price, they're going to end up like this Chinese hedge fund, which is closing down. So it says this Chinese hedge fund had a drawdown of 18.8% in the first weeks of January. aka lost about 20% of their entire fund in just a few weeks. As a result, the fund is returning remaining money to investors after losses in Hong Kong and Chinese equities positions. And as a result, the fund is returning remaining money to investors after losses on China and on Japan. The chief investment officer wrote saying, "I've reached the stage whereby my confidence as a trader is lost." He said tough trading since October and a disastrous January has proved that my past experience is no longer valid and instead is working against me. So while this specific hedge fund didn't have anything to do with AMC, it just shows that many hedge funds right now are closing down because of the difficult circumstances. And if you think about those hedge funds that are currently shorting stocks like Nvidia, AMD, Coinbase, Google, Microsoft, and many others, those short sellers are going to be struggling massively too, since around October as well. And as those stocks, Nvidia, AMD, and others continue to run, those short sellers will be closer and closer to being liquidated, just like this Chinese hedge fund. I also wanted to go through one of today's trades in the Millionaire Mindset Trading Group, which was on IVP. Jacob had a brilliant start to the early morning, turning $277 into $671 as IVP ran 202%. Now this one was a very early trade as it released some news, pulled back, but then it got that breakout and continued to push higher, running from 33 cents per share to $1 per share at its peak. I also wanted to be completely transparent and talk about the other trades we took today, as today actually wasn't the best day. Yes, we did start with a 200% gainer, but then had a small 5% loss, another 10% gain, a small 5% loss, and another 10% gain after that. So even ignoring this giant 200% gainer, it was still a profitable day with 2 10% gains and 2 small 5% losses. Again, just being completely transparent to show that losses do indeed happen, we just keep them small, few and far between. Now, Practical Stocks has also tweeted this very interesting screenshot from Charles Payne. So Khaki asked Charles Payne his thoughts on why AMC hasn't yet hit $100 per share. Charles Payne replied saying because there's more synthetic short sellers than there are buyers right now. Which really I think sums up why AMC hasn't yet experienced the squeeze yet. Yes, buyers are still around. Yes, retail investors are still around. Yes, retail investors are still holding the stock. But right now, there's just more synthetic shares being sold into the market than is being bought. And there's two main things that can increase that buying pressure. Either A, retail investors buy more shares, which I'm not encouraging you to buy shares, hold shares or sell shares. I'm just telling you the facts on how a stock price increases. Either A, there's more natural buyers, or B, when a short seller is liquidated, they're forced to buy back those shares. That's the way that buyers will overpower the synthetic short sellers. Either A, there's just more natural buyers, be it retail investors, institutional investors, or whatever it is, or when hedge funds get liquidated, they're forced to buy back shares, creating buying pressure. And speaking of which, speaking about just how large that synthetic short selling spree actually is right now, check out this tweet from Stocks Batman. So he tweeted saying on December 19th, 2023, a third of the entire day's volume failed to deliver. Now, I actually touched on these FTDs for the 19th of December 2023 in my video earlier this week. 5.7 million FTDs in one day is actually a new high of FTDs because before the 10-for-1 reverse split, 5.7 million FTDs is the same as 57 million. So whereas many shills and short sellers are telling you the reverse split allowed those short sellers off of their FTDs, actually it didn't do that whatsoever, as we've just hit a new all-time high of FTDs on the 19th of December. And not only did we hit a new all-time high of FTDs, but 5.7 million shares failed to deliver is massive compared to the total volume on that day of 16.3 million shares, about a third of the entire daily traded volume. Now, expanding on that a little bit more, Cornelius the Ape tweeted saying, we're being gaslit by the short sellers and the shills into believing that Ape was some trick, that Adam Aaron bailed out the hedge funds. But he said that couldn't be further from the truth. He said, in fact, Ape is the naked short's worst nightmare. Either AMC would raise money or they'd have to double down on their naked short selling to suppress the price. And he said, as a result, the short sellers not only didn't close their positions, they actually doubled down and added even more. And that can even be proved as factual evidence or factual truths because the short interest is also at all-time highs as well. We can see right now the short interest is at 25.86 million shares, or pre-split 250 million shares, around half of what the AMC float used to be. Again, pre-split, this was only around 140 million shares, which is a massive decrease compared to what that number is right now at 250 million. So we know the short sellers did double down during Ape and the reverse split, and that's why the short interest has increased from 140 million shares to 250 million shares. And while we're seeing a new all-time high in FTDs and a new all-time high in portion of the daily traded volume as an FTD, being around 33% of the day's traded volume. And that is why what Charles Payne says is true. There is indeed right now more synthetic short sellers than there is buying pressure. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.